Understanding this concept gonna allow you to sometime hold some of your trade longer because you see certain things playing out. But this gonna come with experience to be able to utilize this concept. But it's mainly utilized in higher time frame analysis, and sometimes can be utilized in holding certain trade to final target or to delivery because you understand how price is delivering based on the candle formation pattern, which is AMD or Power 3. Now, every single candle when they open, right? If it's going to be a bearish candle, like let's say, for example, in this example here, if it's going to be a bearish candle, we're going to open above, we're going to move above the open and manipulate above the open. And then we're going to distribute below the open afterward once we have find a level where we want to essentially reverse from. And then at some point, we're going to close inside, right, of our range. So you're typically going to have the open here, the close here for a bearish candle, and this is going to composite of the body of the bearish candle that you're going to that you guys are going to mostly look at when you see the chart. So if you look at any chart right now, if you see a bearish candle, it typically had open here. It has manipulated usually above the open for the most part, and then had come down below the open and has looked to close inside the range, right? That's typically how the candle will form. Now, when you're looking at a daily candle now, right? Remember how we talked about weekly candle, daily candle. On a daily candle, usually you will see the price open, right? Maybe somewhere closer to midnight, around midnight, or we open usually around what time? Let's say 6 p.m., the beginning of the Asian session, right? And then price move plays around, and around, let's say, New York open of the next day, price can manipulate because that's where we get volatility, right? Remember, guys, we get volatility around the New York open. So we can manipulate around New York open and then also sell off around that same window of time, right? Remember, I told you, yes, in the last few sections that between 8 and 12 p.m., essentially the overlap between London and New York, this is a window of time when you can anticipate a lot of volume coming into the market. And that's typically when you can expect the best move to essentially deliver, okay? Between 8 and 12 p.m. So in this specific window, that's where you want to look for price to expand rapidly. All right. So we open right here at New York open, and then we manipulate strongly above that, and then we sold off aggressively, right? We sold off aggressively. And then as we sold off here, right here, the open is exactly right there. And then the close usually going to be sometime in the PM session, right? For this daily candle. So typically in the last hour of the day, sometimes that's where you can sometimes see that happen. So for those of you that trade, sometimes power, we call it power hour, that very, very last hour of the day. Eastern time, I think Pacific time is typically 2 to 3, which will be 5 to 6 usually PM Eastern time. You can sometimes see a lot of volume come in and to close that daily candle. Understanding this is going to be the best time for you to trade usually. It's either going to look for an opportunity within this window, 8 to 11. I would say usually 8 to 11:30. I don't like to go beyond that, to be honest, for me personally. Or 5 to 6, right? Because this is where you're going to get the most amount of volume out of the market to essentially create the top wick or to create the bottom wick of that candle. That's going to be where you're going to find consistency in trading. For me personally, that's what I recommend. Same thing for a bullish candle. We're going to typically open somewhere here. So we're going to open first in discount. So here we're opening up in premium. Here we're opening up in discount. You're going to see price typically move below the open, manipulate here around the New York opening of the market, and then expand. And then same thing, 5 to 6 p.m. on average, this is typically when you're going to see this wick being formed, or the top of this wick being formed. Same thing here. The top of this wick on the average is going to be formed in this window right here. And then the bottom of this wick right here is going to be formed, and the top of this wick going to be formed. It's just going to be opposite, right? So this one goes here, this one goes here. That's it. This is based on statistic, right? If you go look on a daily candle, most of the time between 8 and 12, if you're manipulating above New York open, above the above the open of the market with the New York open price, like 8:30 or 9:30, you're going to see the top of this wick being created within this window. And then the bottom of the wick being created within this window. That's when you're going to get the cleanest move. When price is creating those wick, right? When price is essentially creating those wick on top and on the bottom. Now, sometimes when price create those reversal, they don't stay intact for the entire day. Sometimes price can create this wick and then come down and then keep expanding later on during the day. Right? It does not always stays here and expand for the entire daily candle, but that can happen a lot of the time when we see those expansion continue. I hope that makes sense. So this is AMD, right? So usually when you see an accumulation, this is what an accumulation will look like, guys. Will be consolidation, ranging phase. It will look like past is very indecisive. It does not want to give you any sort of clear direction where we want to go. And then the manipulation will be like this, where we rapidly come down and grab liquidity below this level and then seek to start reversing. Usually you're going to see a bullish breaker being created somewhere here or a balanced price range sometime being formed here. This will be some of the little indicator that price is willing to reverse. Another thing as well, sometimes you can see is you can see like a previous day low or old low being grabbed here as price essentially try to reverse beyond just the little liquidity that you have here on the 1 minute. You sometimes can see another large level of liquidity price is seeking to grab as we reverse and form a bullish unicorn breaker or maybe like a balanced price range here, and price essentially reverse back inside of the range to reverse. So when you see that, that's typically a confirmation that price is trying to now start distributing after manipulation. So these are AMD. So the open typically, around the open, when price open, we're going to accumulate and then manipulate and then distribute. That's typically the three phase that comprise of a kind of candlestick formation, essentially. So this is just for the bearish example and then a better visualization or representation. So you guys can see accumulation, manipulation, and then distribution, as you guys can see right there. Boom, close. And then this reversal here could have been caused by that last hour, that power hour that I described earlier, where you start seeing maybe 4:30 to 5 p.m. start confirming that reversal here. And this massive, really, just rally rapid move here could be that power hour, volume kicking in. Or sometimes you can see this as well. Could be this right here, this drop right here before we close. Could also be that 5 to 6 p.m. But regardless, that's typically how a candle would typically form. So it's important for you guys to understand this because this is a very, very good concept to really master. It does not help you find necessarily the entry like all the time, but it helps you just have everything. Like, because some days, right, you'll be able to see how things align, right? Because if, let's say, for example, you get on a trade maybe somewhere around here and then you reverse, and let's say your original target is right here, now I have more confidence that we can actually seek to take out this low right here before price take out this high. So this should be a nice run down to here for sure before we do anything else. So it gives you the conviction that, okay, because I understand what's delivering, I understand the context is what essentially forming, I have way more confidence. Because if you're holding your trade here, you can hold your trade past the level, past the test and see if we um past the level right here. Hold on 1 second. I'm just gonna make sure. All right. So you can sometimes hold your trade past this target because you can see, okay, if we break past this open right here, right, this is the open of this candle, it looks like we have accumulated around that open. We didn't want to give us any direction. We manipulated above that. Maybe we grab a previous day high or something along those lines. And then we reverse, we form a bearish breaker right here, right? Or bearish unicorn breaker or BP or some sort that got formed here. And then now we're breaking past the open. Guess what, guys? Now it's giving you the confirmation that we may even go lower, right? It may come back inside to retest that, but it's more likely to potentially go lower if we keep rejecting of these and then we stay below the open. So that's just trading with context, right? Having an understanding of what's delivering. And as you trade, guys, I want you guys to add different context to your trading. One of the contexts I'm going to describe earlier, after this, is going to be the market maker model, right? We're going to talk about that later on. Another context that you guys can add is going to be the qualified expansion range, right? So when you trade and when you take a trade, I want you guys to have different lens that you guys utilize to essentially navigate the chart, right? Because if you only have one lens that you utilize when navigating the chart, let's say is support and resistance, you're cooked, because that's a very, very good framework, but it's not enough to give you enough of a context to enter trades where you feel with conviction that this trade should go in your direction, unless you just want to be very mechanical, which is also fine. But I want you guys to have conviction when holding a trade, and over time, building the different lens that you need to be able to understand what's delivering with price. Closing remark, the last section, make sure you do your homework, practice and understand the framework very well. What you can do is just go to the chart, look at a daily candle, and essentially look at when we start forming the high of that candle, when does the low of that candle get formed. I want you guys to look at maybe about 10 days, 10 different days, open a daily candle, and then go down to, let's say, the 5 minutes, and essentially look at, okay, when was the high form for that candle? Well, I want you guys to write the time down for that. This is a homework, guys. So I want you guys to go on the chart. We can actually do this right now as we speak. All right, back on the chart. So you guys go to the daily candle. We'll remove this. You guys go to the daily candle right here. You're on the daily chart. You guys can pick any random day. I don't really care. Any 4 to 5 random days. And this is a good exercise. So let's say I pick this candle right here. I go down to the 15-minute time frame. I put ICT everything on it. Oh, I didn't remove it. So the last day right here for this on this indicator would have been this one right here, Wednesday, right here, and then we're going to head into this day. This is Thursday. So Thursday, when market open on Thursday, is really, really close to right there, midnight, right? So Thursday is right here. The low of this candle was created around what time? 10 a.m., right? When is the high of this candle created? At the closing of the market. This isn't just meeting what I just talked about earlier. And Wednesday at the open of the market, Wednesday open is really Thursday, true Thursday open. Okay. So the true Thursday open right here will be this candle right here. This will be the open on Thursday right here. So Thursday open right here. You see how we essentially consolidated on Thursday all the way until here. And then guess what happened between 8 and 12? That window that I given you guys. We manipulated, right? Below, right here. And then we distributed, guys, right here, all the way. And power hour, if you look between the last 2 hours of the day, last hour of the day, so which is like 18 is right here. Let me add one more candle right here. 18 is right here. This is the last candle of the day. You see? And this is the open of the next day. So I can kind of like move this back. So if you identify this right here, if you look carefully, the last hour of the day is this massive push right here, guys. So 16:30, 16:45, 18. All right, so this last few candles right here represent the expansion of that last hour of the day. So if I go down to the 5 minutes right here, 18:10, 18. So the last hour right here didn't give us much volume, but towards the last 2 hours, we get a lot of volume. So sometimes it's going to be power hour. Sometimes it could be the last few hours. But I want you guys to just see, regardless, the last hour of the day created near the highest point of the day, right? It's not always going to be that perfect, but it's typically statistically, right, based on probability, it's typically when you're going to see that being created. So as you guys can see right here, this is a perfect example, just speaking of random day. Open is right here. We accumulated above the open, manipulated below the open, created a low of the day between 8 and 12, and expanded from that point on. So let's take another day. This is a previous day right here. Let's look at when the market opened for this one right here. It's not always going to be that exact perfect picture, but you guys are going to see. If you guys practice doing this over and over, you guys are going to realize that this is not random. Like, this is not freaking random. Okay? So we accumulated for the most part around the open, like an example of the accumulation that I've shown you guys. And if you look carefully, right, a 8:30 to 12, 8:38 to 12, 12 is like right there. Get to 8:30 right here. And then 8:30 to 12 would stop us like right somewhere around here. We created a low of the day right here, and then we distributed after that.